Open banking pioneers, hello and a big warm welcome. Thank you for joining us around our campfire. Our theme today is digital identity in the world of open banking. However, before we talk about this, I'd like to draw your attention to the charity QR code at the bottom of your screen. Everybody at OBE, and I imagine very much like you do, watches in horror at the war in Ukraine. I wake up in the morning and the first thing I do is check in on the news and look at the progress of that 40-mile column of Russian artillery. So what can we do to help? What can we, in the UK, how can we really help? Well, one simple thing you can do is you can lift your phone and scan in the QR code and make an open banking charity donation. It's powered by MoneyHub. Your donation will go to Tech Refugees. This is a charity aligned with a sector that we all work in. We're also working on some other initiatives to support the refugees in Ukraine, started by Ozone, and we're channeling, putting everything through our friends at Innovate Finance. Far better that we work collaboratively, far more powerful. Okay, so back to our topic today. Digital ID in the world of open banking. Now, this is too vast a topic to cover in just 1 hour. So on this occasion, we'll extend it a little, and I forecast we will be going over time. So by way of setting the scene, digital ID applies to each and every one of us. This is our data, our identity. It's a controversial topic, and it's not without its challenges, which you're about to hear. So just a few stats. As of last August, governments around the world had launched 165 digital or partially digital identity schemes. So does this indicate a collaborative public partnership approach? Let's have a look. Now, Accenture forecasts that the market size for global digital ID is projected to grow to a whopping 49.5 billion by 2026. So there's a huge market growth opportunity. So digital identity, it supports customers, consumers, businesses by streamlining processes such as registration and authentication, secure digital payments, and digital high assurance contracting, for example, through digital notary services. Now, I'm hoping you'll hear more about this, and there is a couple of fascinating use cases in the legal services and also what's happening in auditing too. Our aim is to show as many use cases as we can, and hopefully that will inspire further innovation. Okay, so historically, banks have been fined millions of pounds for non-compliance relating to ID. Open banking has to improve and simplify know your customer solutions. So digital ID is the use case that impacts all of us. Now, we all talk about the democratization of data. Open banking is, after all, us as consumers giving our consent of our data to be shared securely, underlined, by a third party. So isn't now a good time to learn more about this as open banking moves into open finance and open data and beyond? Here's a question. Is the current consent framework helpful here? Does it need to be changed? Do we need to look at it? Now, I promise you, this campfire will have you sat on the edge of your seat. If the speaker's briefing call is anything to go by, it will be provocative, passionate, and the panel certainly don't pull their punches. We have 2 fireside chats, one with Brendan Jones from Consensus, talking about digital ID for corporates, and James Varga, absolute pleasure to have you here, James, from Direct ID, showing use cases from a more consumer world, so to give you that contrast. And we have an exceptional wrap up with an update on secure customer authentication, the FCA sprint from one of the leading experts in secure digital payments, Fabian from OK. Now, I've deliberately kept my intro short so you can hear from our experts. Please get involved. You can see the poll at the side of your screen, and you can see Slido. So David, without further ado, we've talked about working together for some time now. I can't wait to hear from you and our guests. Over to you, David, and thank you.
No, thank you. It's a terrific subject, and I never get bored talking about it. Tragically for everybody involved, but it's good to have an update on where we are with all of this. So thank you very much, Helen, and thank you for the invite. So yeah, so we're going to kick off just with a little chat with Brendan, and I are going to try and set the scene. And I know not everybody, I'm guessing not everybody that's logged into this has the same depth of knowledge, background, or obsession, frankly, with digital identity. So I want to sort of set it out clearly before we go into the panel discussion. So Brendan, if you wouldn't mind, I just want to get your perspective on a couple of things to frame the sort of discussion. So first of all, for people in the digital identity world who aren't as obsessed with open banking as you are, and for people in the open banking world who aren't as obsessed with digital identity as I am, can we just clarify the intersection? So why is it that for you and for the people who are trying to build businesses in this space, why is digital identity a problem? What is the actual kind of logjam?
Yeah, sure. And it's great to be here today. Thank you very much. We often hear a lot about digital identity, and it very much focuses on about identity of consumers. But underlying that has to be identity of organisations that are operating in the open banking space. If we look at European regulation for open banking PSD2, it states the use, for example, of digital certificates under another piece of regulation, which is called the eIDAS. So every organisation that operates within the open banking space, excluding the UK, because we have a slightly different system here, but within Europe, each entity, whether it be a third-party provider, whether it be an ASPSP, a bank, all have certificates. And these certificates are issued by what's called a qualified trust service provider. So an organisation who's been regulated to issue the certificates. And the certificates are used for digital identity. And there are a number of issues around the use of these certificates, not namely the fact that they're only issued for a certain period of time. So organisations have to keep updating them. And like most of these things, when you go into an operational mode, you forget about certain aspects of your system. So you store your digital identity and don't necessarily update it when it's coming up for expiry. There's also the information that's contained within those passports isn't as comprehensive as one would have expected. So, for example, the certificate is simply a reflection of the authorization status of an organization at the time of the issuance of the credential.
Hold on. So just back up. So you're talking about kind of two separate kind of authorizations here. So if I'm a company that wants access to a bank, like I want to be an AISP, for example, I need to get authorization from who to allow me to be an AISP?
You need authorization from your local national competent authority.
So for us, it's, by the way, I should say for the viewers watching, competent doesn't mean what you think it means in this context. But yeah, so I go to the FCA and I get regulated. But then where does this certificate come from that proves that I'm allowed access?
So let me talk about it from a European perspective, not necessarily a UK perspective, because we have a slightly different model in the UK with Open Banking Limited. So once I've been approved to operate as an AISP, I then go to an organisation which is called a qualified trust service provider. And there are a list of these organisations that are published by the EU, and you can go and find one anywhere in Europe, and choice is yours. And you go through a process of identification with them, proving your credentials, proving your regulatory authorizations and so on. And once you've completed those checks and balances, they will then issue you the digital credentials that you will now use as an AISP to identify yourself to a bank every time you're trying to access an account or execute a payment transaction on open banking rails.
Right. So in essence, I've been given a digital identity. That digital identity, contains something which says I have permission to do this.
Correct.
And when I give that to the bank, how does the bank check it? How does the bank know that it's real?
So the bank knows it's real because certificates, by their very nature, are cryptographic documents. So The bank can go back to the issuer of the certificate to check the validity of the certificate to ensure that the third party is indeed whom they say they are. However, we have to remember that identity is different from authorizations, okay? And this is where the European regulation is very, very blurred. So if I have a certificate, I can validate the identity of the third party. But that certificate is merely a snapshot in time of the third party. Their regulatory status could have changed on many fronts since that certificate was first issued. And indeed, that's quite common. We see that on our systems itself. And the certificate doesn't hold, for example, other important information. We're all familiar and aware with the concept of passporting in Europe, whereby I am regulated by my home national competent authority, but I can apply to operate in other legal jurisdictions across the EU. So if I just check the certificate, I cannot check if it's in a foreign territory, whether that third party is indeed regulated to operate in that legal jurisdiction. I have to go off and find additional information in order to go through that process. And that information, if it had been thought through in the early days, could have been packaged in a much better way to support open banking. And in the early days, everybody built their systems for compliance. No one was seeing any transactions. And in this market space, we've always contested that the UK is at least 2 years in front of the rest of Europe, if not slightly more. So what we're starting to see now is transactions really start to build in Europe. And where everyone built for compliance initially to get a box ticked with the regulator, they're now starting to suffer because to use sticking plaster and glue doesn't support the long-term strategy of an organisation where they're starting to see significant volumes coming through on the open banking rails.
So in essence, and this isn't just a criticism, I mean, EIDAS does kind of jumble together identity and authorization and things, but as a general point, and this is, you know, as a lesson for other jurisdictions, had we sorted out digital identity properly in the first place, then the whole kind of open banking thing would have been a bit easier. Is that a reasonable observation?
I don't think it's a reasonable observation. I think it's fact.
No, thank you.
And I think even the EU has recognised that themselves, because they've issued a paper about a new regulatory framework for a European digital identity, which will ultimately supersede EIDAS. So they recognise themselves. It was a piece of legislation that was published, been taken up by a number of countries, but interpretation of regulation has meant disparity in the implementation. And ultimately, EIDAS was built really for citizen to government based services, not business to business.
Not for the B2B stuff. Yeah. So just from the point of view, I mean, you're somebody who's actually built a business on the back of open banking. Mm-hmm. And so you're experiencing these frustrations, I'm sure, on a daily basis. Just from your point of view, what would be the sort of top 2 or 3 pieces of policy guidance you would feed back on this kind of thing? Like, just, you know, if we could get the ear of the regulators and the legislators.
I think it's to build robust standards, but I also think the EU's taken a very sort of EU-focused approach. You know, we started as a European business. We're now an international business, and if we move looking at digital identity on a global basis, you know, fragmentation doesn't even start to describe what you see when it comes to identity schemes. Open banking, you know, it started as a European initiative. It's now gone very global. We're seeing more and more countries look to try and leverage the benefits of open banking, and standards are really required, not just for digital identity of consumers, but of businesses as well, to allow for interoperability, not just at a country scale, but even, you know, at a regional scale as well. You know, people are looking to deliver services not in one country, but in multiple jurisdictions, whether you're in the EU or Latin America or Asia Pacific, wherever it may be. And I think there is a great argument for the development of and management of an international ID-based standard that can support global adoption.
Well, let's not run before we can walk on that one. I think would be my observation on that. But thank you, Brendan, for making it clear that there is a real need, and there's an international aspect to it. So we're going to go to the panel in a moment to talk about some of those international aspects. But just to finish up on this kind of business side of it. The distinction between the identity of the business, and there are other initiatives in this space like LEI and stuff like that. The distinction between the identity of the business and the attributes of the business that you need to see in order to do business with somebody, that's quite an important distinction. And if it's going to be real time, essentially. So if I issue you with a certificate that lasts 6 months and then halfway through it, I get up to all sorts of no good. That's not really a very good system. And on the other hand, I don't want you to have to go online real time to a database every time you want to do something. So something's gone wrong somewhere, hasn't it, with this setup? What should we actually be doing with our digital identities? And where should those attributes be coming from?
So that's why we built Consenters, because we recognise that issue. You do have to go online to do these things, because it's all about real-time online processing. But trying to mix authorizations with identity attributes is the wrong thing to do.
Right.
You need to, identity is one topic in isolation, authorization is another. And, your opening statement, which made me smile, the word competence, not what you mean it is, I could not agree with even more. Because you go from one national competent authority to another, the way the data is structured, the way the data is presented, the way to access the data is completely different from one national competent authority to the other across the whole of the EEA, including the UK. And that just drives utter complexity into the ecosystem. PSD2 tried to address that by directing the EBA to deliver a directory. So they just deliver a JSON file, which you can imagine that's really good to get hold of and try and interpret in real time, especially when national competent authorities don't keep it up to date. The most frightening thing of all of this, David, for me, is banks believe that if they check identity, it means that they're not liable for fraudulent-based transactions or unauthorized access to data. And that is factually incorrect, according to the regulation and the law.
No. It's very clear that the ASPSP has the liability, through. Okay, good. Thank you for setting out the problem space, Brendan. Right, now let's talk to some informed people about what some possible solutions might be. So if I can bring everybody in as the panel now, Dan, Daniel, Stephen, and James and Brendan, of course, your input is valuable too. So I think we've identified the fact there's a real problem. I think we probably identified the fact that, just to sort of rephrase what that real problem is. So if I understood Brendan correctly, if you're an AISP or PSP, then TSP, API, PSD2 access needs QTSP, EIDAS, PKI. You're not writing this down, guys. You're paying attention to this, because I'm coming to you for solutions now. Now we know what the problem is. So let's just quickly go around and get a couple of opinions on this. So, and I'm going to ask you sort of directly, guys, because I know you've looked at a lot of different possibilities. Brendan made that point about we really kind of need a more international view on this. So where do you look to in the world to see interesting experiences and useful examples that we can draw into the open banking world, from that digital identity world? Let's start, Dan. Come on, I know, Dan, you've looked in considerable detail at the international options going around. Where do you see optimism in this space?
Well, I think there's obviously a couple of different approaches. There's like national schemes like we see with Estonia or even India further afield, but I think ones that are probably a bit more appealing, a bit more usable for open banking are probably the federated type schemes where the bank has taken the lead. So Bank ID in Sweden or Norway has obviously got some headlines. But I think, going back a little bit, I think whether you're making a payment or sharing data, it all comes down to the consent framework. And open banking was launched in Europe. The consent mechanism wasn't there. So obviously Brendan established that. So I think these are one possible option where the state partnership can provide that role, but there's also open banking can play a role in providing better digital ID, which we can touch on. A clear example, I think, well, we're based in the Netherlands in the EU. You may have heard of Ideal, which is the bank payment rail. It has a sister product called IDIN or IDIN, which allows a third party to verify users' ID based on their bank account info. What's interesting here for us, though, is that market initiatives are being built on top of it for PSD2 services. It's being used for onboarding for AIS and PIS with some of our customers and for SCA. So already we're seeing that actually SCA is a little bit better in some markets because of these things. One, I think it's the investment at Peaks. They use this system for onboarding before a PIS payment. Also to add, it's bank data at the moment, but I do believe a legal amendment means that more holistic government data is going to come into this program as well. So that's one possible solution that we've seen out there. And I don't think, though, there's going to be a Europe-wide approach on this. We've seen how EPI is broken down, and cross-border collaboration between banks across the EU level. I just can't see it. I don't think it's going to happen in the UK either. So I think these are good national solutions. And there's a framework being built out of the EU, but I can't see how they're going to read across, particularly with banks playing that role. Also, a little bit unsure about banks playing that sort of monopoly role in digital identity, where it could be a little bit more tricky. And we've seen the issue we've had around SCA, but a good one, we think, where we've seen practical examples is in the Netherlands with IDIN.
No, IDIN, I think it's a very good, but things like IDIN and Bank ID, and actually you mentioned India as well. These are sort of, in a way, kind of last generation systems in a way. And I don't mean that in a negative way, because they've done a great job. But the idea that you would have an ID given to you by the bank and you use this ID wherever you go, that already seems to me to be a little bit outdated. But we'll come back to that in a minute. But let's just talk about this point about somehow getting these different international things to work together. So, you mentioned in passing federation, and I know that Dan Jay, I know that you've spent a lot of time trying to get banks to work together in this with varying degrees of success. I think it's not inappropriate of me to say that. But surely this issue of federation is the way forward, right? I mean, we have to get something done there, but how is that going to be actually kind of coordinated?
It seems that there are a couple of different approaches. So there's a kind of centralized approach to data. So if we can appoint a single authority or organization to hold all of our data, so all 7 billion people on the planet, and all of the data about them, then certainly we've got the problem cracked. So that's one answer. That probably isn't going to happen, and so then therefore a federated approach seems to be the most sensible thing. And really, I think one of the great values of a digital identity solution is this ability to be able to draw together information that might not necessarily be directly connected, but could be helpful in providing data in order for a person to be able to access a product or a service. And this is particularly important when we talk about inclusion. So for the people on the call and maybe many of the people listening, so presumably you've got internet connection and a laptop, so therefore you're doing reasonably well. And so you probably don't have a financial inclusion problem. There are a billion people that don't have any recognized form of identity, but they do still have data about them. But that data exists in lots of different and maybe challenging to reach places. So if you can find a way to connect that data together and then provide it, not necessarily wholesale, but provide indicators about that information, then you're providing a solution for people to be able to get access to finance, get access to other products and services in a way that is privacy respecting. So I do think that federation is the right way to go, pulling together information from multiple places, but without having to necessarily make lots of copies of that data and then give it to any one particular authority to look after.
I think, and I want to explore different ways that might happen in a moment, but I just want to pick up, you just mentioned in passing about inclusion as an important aspect of this, because I do think people cast the inclusion problem a little too simply. in terms of giving people bank accounts, but there's a lot more to it than that. Even in the UK, we don't really have full financial inclusion. Stephen, what do you think about this inclusion angle? I mean, can we use digital identity to drive that agenda forward? Or
you can, but you're going to need to bring government and industry together, because part of the issue about inclusion here is that if you're not digitally active, or you don't have a bank account, or you don't interact with certain services or bodies, etc., you don't have those credentials that you can therefore use. So if you do drive a car, you don't have a driving license. My wife didn't have a driving license up until very recently, and she had to take her passport to prove her identity every so often for various things, which was a bit ridiculous, taking that around. So the only way you're going to solve inclusion is to bring public, private together, is to look at things. I think the India, which somebody mentioned earlier, was quite an interesting example, because that is a huge market where a lot of, millions of people don't have a bank account, don't have internet access, etc. But it's a way of giving them an ID and then to be actually biometrically identify themselves and have something they can use to be able to access services. And I think to solve inclusion in the UK context, you're going to have to do something similar and bring whatever, not just banking, but telco data, potentially local authority data, central government data together to be able to enable that kind of giving them something they can use to access.
Yeah, it's not something we can fix. And I mean, from the open banking side of things, we want inclusion, because obviously we want, broad-based kind of open finance, which we'll come back to in a minute. But we can't solve the problem from within, because we need that, those external partnerships and support, which doesn't seem to me to be an insurmountable barrier. There must be a way of organizing things to do this. But yes, we can't do it by passports and driving licenses. That's all rather 1950s. I'm interested about the mention of India, though, because I think, again, it's illustrative for people to hear some other ideas. So I think we all probably are familiar with the kind of Scandinavian bank ID stuff. Daniel's highlighted Netherlands. By the way, Netherlands also has a very interesting experiment going in shared KYC, which we could potentially learn from as well in the UK. And Stephen, you mentioned India again, but just come to you guys, like Brendan, James. Would you like to highlight one or two other examples that we could look at from around the world to see how? Not to say we have to copy them, but just as input to our discussion.
Can I turn it on its head a little bit, David? I can give you examples down in Asia Pacific where there is no digital identity strategy whatsoever. And, we're talking about ID and open banking. They're looking to implement open banking regimes, but, we're having to start from the very, very beginning, building from the ground up, because there are no digital services regulation. Therefore, we're having to work with them. This goes back to my comment earlier about having international standards. Helping countries accelerate open banking isn't just about open banking, it's about some of the fundamental aspects that surround open banking, one of them being digital identity. So there are places that are behind where we are.
Oh, no, I kind of understand that. But I guess what I was kind of fishing for was that it seems to me there are some examples, Australia and Canada spring to mind, where they've opted for a kind of more framework based approach, which actually the UK is adopting now as well. And I given what was said about federation earlier on, I sort of wonder if there's, rather than those centralized systems, I wonder if there's something in those more framework based approach, which actually we could look at more in Europe, maybe.
I think it's just to jump in there because you suggested, I think it's a big part of it. When you look at the full spectrum identity being such a broad topic, understanding where you want to design from is really, really important. Is it centralized or decentralized? I can't see how it won't be inevitably decentralized. The idea on a global base of having one database doesn't work, so it has to be decentralized. And if it is decentralized, building up from there, then you need to embrace a framework type approach. We need to elevate our conversation around identity up to it being more of a utility or a fabric that's there and not owned and managed by any one organization or one government. If we're really going to solve identity, it can't be a Norwegian identity scheme because Sweden will never use it. It can't be a Scottish identity because England will never use it. There's too much, in the same way that you can't have an Amazon ID or HSBC ID because then another competitor won't use the same service, right?
No, but it doesn't seem, beyond the bounds of human ingenuity that I should be able to open an account. I mean, I've been at Barclays for, well, since Helen was born, really. I mean, I don't want to sort of go into it, but for a long time, and if I can't take my Barclays identity into an HSBC and open an account, if I go to HSBC, they want to see my gas bill and driving license and all this sort of nonsense. So like we don't seem to have made any progress on this whatsoever. And the framework approach, which says, actually, you can have these different kinds of identities, government identities, financial identities, travel identities, these other, could all interoperate on the same technologies. To me, that seems to have a little bit of optimism. And I'll throw one thing at you as to why I think that is true. Look at what happened in the pandemic with the push for the verifiable credential stuff. So, I can see faces around here. You and I have all, we've been talking about verifiable credentials for years, and people were playing around with it and doing the experiments, mainly from the sort of self-sovereign space. And now all of a sudden, because of the pandemic, we've got people writing verifiable credential code, putting verifiable credentials into mobile phones. Now you can sort of see, well, if there was a framework, dictionaries for these attributes, you really could start to link those kind of things together without having to have a kind of, this very centralized approach. So this is why I kind of want to nudge you guys into just reflecting on that framework-based approach a bit more. It's new in the UK, so when it was only I can't even remember, Stephen, it was a few months ago, DCMS. Actually, does anybody know why this is anything to do with DCMS? I mean, just as an aside, I don't actually. Why is the Home Office doing this?
The word digital, I think.
Yeah.
Oh, because it's digital. Yeah, you might be right.
And digital and Home Office don't tend to go together.
So in the UK, this is kind of seen as being quite new, but there are other places in the world where they're moving ahead with these frameworks. I mean, you're looking at me, Dan. Do you think I've got some rose-tinted glasses on here, Dan, or do you think there are some real possibilities? Sorry, I meant Dan J.
I do think that there are some real possibilities, and you're right. There's plenty of really interesting experiments that are going on around the world, particularly in the self-sovereign space with verifiable credentials, which do seem to address a number of the challenges. So particularly around privacy and respecting people's data. So, for example, I don't need to share with you my date of birth to prove that I'm over the age of 18, and therefore I can get a price. Obviously, I look very young, so I get asked for ID all the time, so I shouldn't have to get out my driver's license with all of this extra data on it. In fact, I think this is a use case from one of your books, in order to prove my age. And a verifiable credential can provide that, and also address some of the challenges that Brendan was talking about earlier, where we can make sure that credential is up to date without having to do a call home, because that call home problem is another worry, particularly around privacy. And this is something we were talking about earlier, that if you want to use your, let's say, HSBC ID in order to prove that you're over the age of 18 so that you can go to an online gambling site, you might feel uncomfortable about using a bank ID to do that, to perform that use case. But if the bank didn't know that that's what you were using the ID for, but it was still an ID that's recognized by the regulators and by the gambling relying party, then we've satisfied the use case, but without oversharing data.
I think this issue about the not balancing this issue about setting the bar quite high on getting security and privacy. I mean, that could be something where we as in, you know, people coming from the open banking side of things, you know, could drive things forward. Because, and I mean, I'll throw a, I mean, I know this is an example discussed before we're done, but I'll throw like a simple example with you, just because I was reading about it in the papers earlier on today. Internet dating is a good example of something where there's enormous amounts of fraud, because nobody knows even if someone's real, let alone who they are, who they say they are. You could easily imagine a situation where I go and register for internet dating or gambling or, you know, whatever, and I get bounced to somewhere where I, you know, within this framework, I've got my financial ID, but now I want my dating ID or I want my gambling ID, you know, and you can sort of see exactly how that could work in practice. Because to go and get my gambling ID, which says I'm over 18, I'm resident in the UK, my bank knows damn well I'm over 18 and resident in the UK. They could easily give me that sort of cryptographic token, which to prove that, which contains no personally identifiable information at all. I really don't think we're asking for anything crazy. I think demanding a high bar on those things gives us actual business use cases, because you know, those are then revenue streams for the banks, I think, in those kind of areas. So,
but Dave, that hasn't been proven yet, those revenue streams. And if you just take, sorry to butt in, but if you kind of take the case of open banking, so PSD2 and open banking required us to go and build APIs and to enable access to data, and that took a significant chunk of investment. You're going to need a similar level of investment to realize digital identity and kind of verified attribute sharing and access to attributes. And there has to be either a strong impetus, either through a commercial model or through a kind of joint kind of regulation and commercial kind of usage approach for that to happen. Otherwise, you're never going to get the same kind of prioritization and impetus that you had with open banking. That's taken, what, 4 or 5 years to deliver.
Aren't those APIs like really helpful in kind of helping to kind of create this ecosystem of data? So as Dave was saying, you know, having that information that banks hold about us and then being able to expose it, those APIs are a massive step towards that kind of open data economy. I know it's not there yet, but you know, if you hadn't have built those APIs, we'd still be, you know, kind of back in the theoretical conversation that we've been in for the last 16 years.
And one of the,
I think there's a revealed preference for people to I was looking at a survey the other day. Jim Maris at Financial Brand did it, and I haven't got it in front of me, so I can't remember the exact number. It was something of the order of magnitude of, if you ask consumers, would you share your bank account data with third parties? They'll say absolutely no, under no circumstances. That's absolutely terrible. And if you say to them, you know, would you give people like Amazon and whatever access to it? No, I'd never do that. And it turns out that, I can't remember the figure, but 85% of consumers with mobile banking have already used Plaid, you know, to give some third-party app access to things. So it's like, when it comes to actual useful, like, it's demonstrably true that people like, you know, this way of doing things and using this way of doing things. We haven't constructed a good commercial model, I think, for the banks, but you can't blame, because that was never part of the CMA structure, you know. And I know it later mutated into this premium API ideas, which is actually quite a good idea, and this idea of the premium APIs. And I can remember talking to Dan and other people a couple of years ago about what those categories of premium APIs might include. And as far as I recall, identity and authentication was one of the prime use cases, but we were never able to agree any realistic interchange or liability.
But you're also not going to get OBIE prioritizing time to that, because a regulatory remit and it's about regulatory APIs.
Yeah.
There is no kind of scope for commercial APIs, and that's kind of what's missing. So there was some work done on extended customer attribute standard that went out as a release candidate for an API. We've gone and built our own customer attribute standard, which we're doing some pilots with third parties. But unless you get a critical mass of providers of information, you're not going to get the third parties interested to build the propositions and the use cases, because then
I agree. To go to points made earlier on, that attribute sharing could be revitalized through the verifiable credential structures. Yeah, no, I think that's true. Okay, I want to move you guys on a bit. Sorry, I didn't realize I only just looked at the clock. I didn't realize we've been talking for so long. You guys are much too interesting about this sort of thing. So I want to spend a few minutes on the sort of vision going forward a bit. And I just want to push a little bit on this, because one of the reasons why I think there should be such priority attached to kind of somehow synchronizing the worlds of open banking and digital identity is because open banking is just the beginning, right? I mean, we all kind of understand that we're on this journey from open banking to open finance and then on to open data, and this entirely new way of interacting in the future. And we have to get it right for this, because we can't move it on. And you know, the open finance, so in other words, this isn't just about me giving access to my bank account and my credit cards. This is also about pensions and mortgages and savings and everything else, because if the industry is going to deliver what people have begun to call financial health rather than individual financial services, then we have to have access to all of those things. So let me push you a little bit harder. Where is, or I mean, I'm not complaining about you individually, because I know you all, you know, want to see progresses, but where can we open banking people, you know, where can we start to get something done in this space? I mean, what can we do to sort of push that forward?
No one's jumping. I'll jump in. I think keep doing what we're doing is the answer. I mean, there's a lot of industry and a lot of activity around open banking, and you're absolutely right. There is a convergence between identity and bank data that's really, really interesting. And open banking globally is setting a precedence around people being able to share their data. If you ask somebody on the street, would you give a kidney? No. Would you give a kidney if your brother was needed? Yes. You know, so anything out of context is just a silly question. But for me, open banking's represented a sort of precedence around consumers sharing valuable data and commercial models being built from it, use cases being driven by it, changes happening, access to financial services or inclusion or whatever the use case is.
But I don't know what you guys think, but I mean, shouldn't we kind of sort of narrow our focus a bit, stop trying to sort of boil the ocean and pick one or two areas to push this? So if I just reflect back on Brendan's point, I was in a discussion a couple of weeks ago about just how hopeless Companies House data is, which is, you know, well known, and is the source of considerable fraud, because Companies House don't even check if you're a real person, let alone whether you're Dave Birch or anything else. I mean, couldn't we just pick some, like, wouldn't open banking be the obvious way to improve Companies House? You know, so when you go to register as a director for something, you at least get bounced to your bank, so your bank can say, yes, this is actually a real person. I mean, I'm not saying necessarily that one, but I'm just saying, you know, can't you guys think of like one or two narrow areas where we could, you know, really attack it and get something done?
I think there are. I think there's a bunch of. I think there's a bunch of use cases that we could kind of look at, but I wonder whether. So I'm conscious that what I'm about to say might kind of contradict your point about boiling the ocean, but looking at specific use cases that maybe are outside of banking specifically. So utilizing bank data for another purpose, or using government data for the purposes of banking. So, you know, can we use housing and benefits data in order to help somebody open a basic bank account? Could we use the age and address from a bank in order to undertake some other use case, so buying an age restricted product, for example? I think perhaps looking, you know, in terms of kind of what could we practically do next, perhaps looking just a little outside of the specific remit of open banking and financial data use cases might be quite helpful in helping to kind of really kickstart or catalyze the creation of this open data framework that we so desperately need.
Dan, I'd go
Dan, Stephen, do you agree with that? Sorry, Stephen.
I'd go further than that. I think you definitely need to have greater kind of sharing of both governmental and private sector data. I do think you need to focus on some use cases to get some traction and to kind of start sharing attributes and the right attributes and getting that model going. I think ultimately you're going to need to have an OBIE-like vehicle to actually get that industry collaboration and get that traction, accelerate this. Because I think that anybody around this table or sitting in government and is dreaming of an open finance and an open data economy world and the benefits it will bring, without kind of addressing this issue, this is going to take longer and be harder and not create so much benefit as expected.
Fair point. Okay. Well, look, guys, thanks very much for giving us a perspective on that, and thanks for bringing in international angles as well. I hope that people looking in realize that actually the synergies between, you know, the transition from open banking to open finance and digital identity are actually pretty strong. You know, there is actually some pretty, you know, if we could get something going, I think we could really, that would be a little bit of a win-win there, I think. So thanks for that. So now let's move on a little bit and talk more about personal identity. I mean, Brendan kicked us off by setting out the stall on the business side of things, but we've just, you know, when we were talking about there, we've just used one or two personal examples, you know, accessing age-related material and this sort of thing, which hopefully would deliver real benefits to consumers as well as the businesses. So James, if you don't mind me asking, and you don't mind me sort of bringing this up, you have been looking at this for a while, haven't you? And you're much less grey-haired than I am. So you're a very cheerful person. So what is the origin and why do you think things are getting better?
I don't know if they're getting better, and at least in the topic of identity. And we started our journey, what, 11 years ago talking about this. I think we probably met sometimes way back then. And we're still using the same references. We're still talking about Bank ID in the Nordics and Estonia's e-residency program and all those other good things. I don't know if we've really moved forward, but we're starting to understand the problem statement a little bit better, which is fantastic. You know, anything that we do has to be based on verified attributes. I think you'd be hard pressed to argue with that. Anything that we do has to be self-sovereign, because we can't solve the problem for everybody. We have to empower people to solve the problems for themselves. Too many countries, too many regions, too many industries, too many use cases for us to solve it just blanket approach. And we have to decentralize that network, use a framework to do it. And it's exciting to start to see some of this conversation move on beyond it being owned and operated by any one thing, which silos it and restricts it to begin with into something that's much more of a utility, right?
Well,
so, no?
Well, yes, but I mean, I sort of wonder, while we're umming and ahhing and thinking about how to do all this, Apple and Google and Facebook are gradually kind of building this stuff, aren't they? I mean, I see, you know, I see this thing about Apple going to start putting driving licenses into the Apple Wallet. Once that kind of happens, then some of our dreams about, you know, interoperable, international, secure, private, you know, are at risk, aren't they? I mean, what if it all ends up just being owned by Apple or Google? It's not, that's not really what we want, is it?
Absolutely not. You know, we don't want anything that's kind of any solution that's managed by one organization is not gonna fit the world. Not everybody uses an Apple phone. Some people use Android and other things as well, right? So we have to move quicker.
I guess what I was driving at was basically, you know, you mentioned self-sovereign in passing, which I have to say I'm a tad skeptical about, because it's not obvious to me that the average person, and I include myself in that category, as well as Brendan, Daniel, Stephen, and Dan, not so much Helen. But if the average person is required to actually manage and look after their own identity, we're heading for absolute catastrophe, aren't we? Because the first thing that we'll do is they'll get an email from they'll get an email from somebody which says, well, if you give us control of your identity, we'll give you a Mars bar, please click here. And that's the whole thing. Self-sovereign, you know, that sounds good, James, but you're going to have to work a little harder to convince us that that's a better solution than having the bank manage the identities.
But what is the alternative, though? And we've been talking about alternative structures for a long time, and we still haven't solved it. So any one monopoly, to your point around Apple, isn't going to solve the problem. It's easier to have somebody solve that problem for us, but it's not going to give us the flexibility and ubiquity that the identity needs to have. I want to be able to do whatever I want, when I want, using whatever attributes and identity I want to do it. Having Apple or any one organization control my identity, let alone a government, and we reference, you know, in the UK, things like verify.gov and all the rest of it, and the different initiatives. But as we've seen over the years, those come and go every 4-year cycle, right? So having the government solve the problem isn't going to do it. Having one organization solve the problem isn't going to do it. I think we have to look at ways for finding that middle ground between it. It might not be purely self-sovereign, but certainly something consumer-centric, something that empowers the individual with more of that control and an opportunity to do things is what we're aiming for, because convenience is such a strong motivator, right? You know, to your point, if it's too hard or too risky, people won't do it. If you ask me on the street, will I share my bank data? No. Will I share my bank data to buy a TV on financing in 10 seconds? Absolutely, you know.
Well, you say that. I mean, I'd be prepared to. I mean, I certainly think it would be an interesting experiment. Just go to Waterloo Bridge in the morning and ask people for their bank details in return for a bag of crisps, and see what kind of return you get. Because I think you'd be a bit shocked by that. But I want to draw on some of your. I mean, because you have considerable experience of actually trying to build the consumer proposition of this. I asked Brendan at the beginning to highlight sort of 2 or 3 asks, if you like, or 2 or 3 key lessons from that so far. What would you highlight as from what you've learned so far that could feed into, you know, a better future on the open banking side?
It's a good and difficult question. I'm not sure if there's any 1 or 2 big things. I think there's a couple of themes that stick in my head. I mean, we did build an identity product, a consumer identity product, a digital passport, something that you could, just as we described, you know, prove you're over 18 without sharing your driver's license, and you know, these sorts of references have been used for an awful long time. People
like Yoti are working hard to get that sort of stuff into the marketplace as well, aren't they?
Yeah, absolutely. But to your point around moving from an individual or preset sort of structure into more of a framework, I think is really, really important. We have to elevate the conversation to drive more a utility type solution, you know, and the closest analogy I've come across so far is your mobile phone number, right? Your mobile phone number is an identifier. But now as an industry, there's no value in that mobile phone number. Me as an individual, I can own my mobile phone number, right? Like, it takes seconds to switch it from one provider to the other. It becomes an indicator or an identity that identifier that I can take with me, and is now developed to the point where no one sees value in restricting me around the mobile phone number. It's all the services that fall on the back of it. That's where the value is. And it's the same for me with identity. The value is in the data.
But this idea of, you know, I can't help but feeling, you know, one of the elements of the framework approach is that, you know, like most people have, you know, 3 or 4 different payment cards in their wallet they use for different things. I kind of imagine most people will have 3 or 4 different identities that they use for different things. You know, you have your kind of bank identity that you use for money stuff, and you've got your kind of hobby identity or whatever it is, your football fan identity or something, your kind of family identity. I don't think we're gonna have an identity, right?
Maybe not in the sense we're thinking about it still. Yeah. Absolutely. But if we move the value chain down to the data level and we decentralize the data and we move to verified attributes, then the identity element, in a sort of more academic sense, I guess, or pure sense, becomes less relevant. You know, and we've just talked about different use cases and how do you take your data from one use case to the other, one industry, the company's house? Why can't we use bank data? Absolutely. So why would I have to use my bank identity on company's house? Why couldn't I use my open finance identity on company's house, or whatever, right? So that mashup of all these use cases, I think, is a core part of the challenge.
So is it fair to say then, guys, so after listening to what you guys, so Brendan set out a problem space. So you guys highlighted some different approaches to this in different places. James, I think, has said that the technological components that we need to build that, like the verifiable credentials, are there. If we begin to integrate all of that stuff, can we see a very positive feedback loop from open banking into the digital ID space and back again? Or do we really need somebody else to come in from outside to do something about that? I mean, can we do it, or do we need somebody else from the outside to do it? Like the audience are asking about EIDAS v2 and things like that. Are those the things we need, or can we progress? So I'm sorry, I'm asking all of you that one.
Yes, I think those are the kind of the right steps. So we do need frameworks. We do need that kind of interoperability, so that we can start to move outside of specific sector use cases and specific national use cases. So I think someone mentioned earlier on the call. So Norway and the bank ID is great for Norwegians, and it's great in Norway, but it's not so great in Sweden or anywhere else. So, but it would be
Norwegians,
great.
They're not like us. The thing is that Norwegians, they don't care about logging into Pornhub with their bank ID, but we're English, so I think we need more options around these kind of things. I'm not sure if the EIDAS really solves that problem either, but verifiable credentials might well be the breakthrough that we've needed, right? Because if the bank is delivering verifiable credentials that contain no personally identifiable, like you could imagine dropping things into your wallet, not like Apple dropping in your driving license, so you're going showing everybody who you really are, but you could imagine like some sort of bank wallet where I'm dropping in credentials, which I'm over 18, I'm a member of this fan club, I've got a ticket to go to this event, these kind of things, which really would deliver actual convenience and value, which would link with the underlying financial services. We don't have to go into all the embedded finance stuff here, but it needs a little spark more imagination, don't you think, to move this on? I mean, you guys know how to fix this, but somehow we've got to get some traction on it.
It needs some critical mass, and it also needs, I think the verifiable attribute is a great example of what the industry could easily do, but it does need that kind of broader collaboration to get some critical mass on this.
Yeah.
And I also think one thing that everyone will get hung up on is liability.
That might change though, I think, because unless I misread what I saw in the Daily Mail this morning, I think the government is going to put people who run Twitter in jail if they don't check that you're a real person. I may have skipped over some of the details, but in essence, knowing that you're a real person and being able to block social media from people who aren't verified as people, what if something that just comes out of left field like that turns out to be the little thing that we can latch onto to get an actual working service up, and then all of a sudden we've got some traction? So maybe, what if it's not like the banking stuff and the finance stuff and open finance and pensions? What if it's something just crazy that comes out of left field that we can latch onto? Is it possible that the government's new online, actually I forgot what it's called now, what is it, online safety or online harms or online don't look at news that we don't like bill or whatever it's called, but could it be something like that we can seize the opportunity and build something new? No. Okay. All right.
Yeah. Yeah.
So all right, so go back to your open banking dashboards and pensions and whatever then, and we'll see how that works out. Helen, I'm going off to build a new business based on this. I'm sold, even though these guys aren't. So I'm going to hand back to you, because now we're going to talk about SCA. By the way, before you run the SCA video, I have to say, twice this week I've had transactions fail because of this. So some people in this room are not implementing this properly. because I tried to pay for a ticket on British Airways and I got an error message. It crashed and said something, I don't know what it was, but it was obviously something to do with SCA. And then I had another thing where I was trying to buy something and there was a pop-up window which I couldn't see because, like all normal people, I've got turn off pop-up windows because they're obviously spam switched on. And so I couldn't even see I'm supposed to be authorizing something. So whatever the guy's going to say, I'm telling you it's not working. But anyway, I'm going to hand back to you on that one.
So,
Helen.
David, first of all, that was absolutely fabulously hosted. Thank you. I think you should go and set up a business because our audience has been absolutely enthralled. And for the panelists, they can see that's what I've actually put in the chat. We need to do more on this topic. So I'll say my thank yous later. But David, to your point about a couple of transactions being declined, I think it's probably more than some people that aren't complying, but we're not here to name and shame. As we know, the FCA has there's been a couple of bumps in the road, and the FCA have postponed and extended some of the deadlines there. So when we ask our audience what they want to hear about, and everything we do is through consensus and is very collaborative, they said, keep us up to date on what's happening with the FCA secure customer authentication sprints. So it's relevant to what we're talking about now. It's very, very topical. So if we can play Fabian's video, that would be absolutely fabulous. So over to you, Fabian. Thank you.
So the FCA sprint is actually phase 3 of a ramp-up plan that was designed by the FCA last year to make sure that the entire payment ecosystem was ready to meet the deadline of March the 14th for strong customer authentication with a minimum impact on customers, i.e. the card users. By payment ecosystem, it's mainly the e-merchants, the gateway providers, acquirers, and the issuers. The initial idea of the plan was to have as early as possible a minimum of transactions that would be sampled by issuers. So they actually started to do it. And during this sprint that started around mid-January, the idea is to go from 3%, minimum 3%, to 100% of transactions being compliant with PSD2 SCA on March the 14th. So it's not just the sprint that was needed, it's the entire plan. SCA for e-commerce is the most complex case by far for SCA, and we saw that there was some impact in mainland Europe on e-commerce transactions, and I think this is what the FCA wants to avoid by all means. And this is also why there was an initial pushback from the industry, not just in the UK, like everywhere else in Europe, because more authentication was deemed bad for business. So now the UK is the last country to roll out SCA, and at the same time, it's the biggest place in Europe. So I think the regulator just took, its responsibility with the plan and the sprint. So let's start with what it means with consumers. So there is an increase in authentication requests from their issuing banks when they use their cards to do online purchases. And so that's the first impact. There's more authentication requests, and they will have to perform an authentication with 2 factors, which is quite a difference with what they used to do with receiving one-time password by SMS and then inputting it into an application. So depending on the overall readiness of the consumers and the payment ecosystem, consumers could fail to pay or abandon their shopping carts altogether. Now, regarding the merchants, the e-merchants, the retailers, I have first a comment. I think the big ones should be ready because they have the teams and resources to handle SCA and the complexity and the exemptions. I'm a bit more concerned about smaller ones, maybe missing out on the best practices to work the exemptions to SCA. Now, having said that, when it comes to what it means for retailers, I think there are 2 important things they have to focus their attention on. The first one is they have to understand 3DS and make sure that they're using the latest version of 3DS. And once they have that, they need to fully understand what fields are important to fill out correctly and how to flag transactions. 3DS is really an SCA and an exemption enabler. And retailers cannot turn 3DS off as they used to do with version 1. So they need to understand what exemptions are available to reduce the authentication requests. And for retailers, there might be two important things. The first one is the low value transaction exemption. So basically you purchase, you can actually make a purchase below £25 and it's exempted from SCA up to a certain threshold, either the number of transactions or a value threshold. And the second one, which is the most important one, and the most complex one, is transaction risk analysis. Here we're looking at the aggregated fraud level of the acquirer. And if the acquirer has a low level of fraud, then the amount of the transaction not requiring SCA is higher. And this can go up to a £440 transaction not being or being exempted from SCA. So there will, of course, be some impact on the retailers in the UK. Mainland Europe faced a 20 to 30% payment failure or cart abandonment after the SCA launch. So there is an impact, but there's room, I think, for optimism in the UK. First, the industry had more time to prepare, and there's the ramp-up plan. And it also could benefit from the experience from what happened in mainland Europe, and also had more time to prepare and educate the customers. I mean, hopefully. Also, the UK has had a unique approach when it came to SCA. I mean, most countries in Europe, or all of the countries actually launched SCA for both internet banking and e-commerce SCA, whereas the UK decided to have, there was actually two deadlines in the UK. One for internet banking, which happened in March 2020, and another one for March the 14th for e-commerce SCA. So I think consumers might have already been exposed to two-factor authentication and SCA challenges via their banking app, for instance. So all of this should make a smoother transition, hopefully. And the last impact is actually the decrease in fraud. So we might see a decrease in card not present fraud in the UK. The EBA reported last year in June a 50% decrease in fraud in Europe, which is quite an achievement. And this is why SCA was all about in the first place. So what's next? There are different levels. The first, from a regulation perspective, so there will be a PSD3, not now because we're still digesting the new way of doing things in mainland Europe and obviously in the UK. Also, the European Union is working on the digital identity wallets on top of local country initiatives, and identity and SCA go hand in hand. So this should simplify quite a lot of things, well, for payment, but for a lot of practical things in our lives. So that's what we're looking at for regulation. From an industry perspective, I think this year and next might be all about SCA optimization once it's enforced. Many looked at SCA and wanted to tick the compliant box. The next phase is, how can SCA work for you? So e-merchants will actually master exemptions, work on the exemptions. Issuers will provide a better way to authenticate, a better experience to the users with biometry and behavioral biometry, and acquirers will work around their fraud level. Now, the last thing for the industry is that it should really focus on security, because you can count on hackers and fraudsters to actually be innovative. Once the SCA was launched in Europe, you could actually see that they actually started to attack the re-enrollment process when a consumer lost their mobile phone, for instance, and there's money on the account. So they attacked the SCA process. But the next big threat, we think, and I think, is banking malware. For a few $100, you can actually learn on the dark web how to launch such an attack. So for issuing banks, the main thing is, you need to make sure that you are safe and compliant now, but you actually stay safe and compliant for the next 10 years.
Fabian, thank you. We have run over time, but I did forecast that. Before I wrap up with a couple of thank yous, Dave, you're not expecting this, but do you have any comments on what you've just heard from Fabian? I learned, actually, I actually genuinely didn't know about the fraud impact on limits.
What do I think? I think in the UK, authorized push payment fraud has already overtaken card fraud. So I'm not that bothered about card fraud anymore. And if anything, more nonsense around SCA should be an impetus for people to develop PISP embedded finance propositions, which avoid some of that stuff. So, so I hope it's a stimulus to innovation, actually. Yeah.
Okay, and let me, before I wrap up, just throw it out to the panel, if anybody else would just like to comment on what Fabian said. No? Well, then I will wrap it up. Let me just say, I have had loads of messages already on WhatsApp from everybody saying this was absolutely brilliant, truly was superb. So thank you very much for giving up your time and being so generous with your insight. Dave, I've said before, brilliantly hosted and great to be working with you. A big thank you to all of our panel. We will be sharing this with everybody so they can post it on their social media. We will be putting it out in our newsletter, even on social media, and sharing it with our global audience. What we do see is that the content that we produce here has a very long tail, and particularly a topic that has real legs, and we haven't really solved it yet, have we? I've seen that people are saying that we need to take it from POC and have maybe more a catalytic event, and maybe that is the way we need to go, more use case driven. So absolutely brilliant. A big thank you to everybody for tuning in. A big thank you to Dave and to the panel. And my last thank you, without it sounding like the Oscars, is to the OBE team, who work amazingly hard, particularly with all the support we are and fundraising we're doing for the Ukrainian relief. So one last plug, if you haven't already, please do lift your phone and scan it in and make an open banking payment. Thank you, everybody. Wishing you the very best of health. Thank you. Goodbye.